Good morning. It's Thursday, May 2nd, about 6 a.m. Central Time. So overnight, the precious metals are weaker. However, we're starting to come back with a little bit of green on the screen in the platinum market and also in the gold market. Now, yesterday we saw the conclusion of the latest Federal Reserve meeting where Fed Chairman Jerome Powell pushed back against the ideas of, yes, additional interest rate hikes. If you follow me on Twitter, it's at Streible. I've been talking about interest rate hikes and the possibility of it for quite a while. As a commodities broker, you see a lot of these inputs and how they trade. Simple things here like live cattle and grains and some of the softs, things like cocoa, crude oil, all pushing up here, and then tracking some of the other things like living in an area that's predominantly dominated by rentals and short-term rentals, seeing those remain at elevated levels, and also insurance premiums going up as well. The possibility of interest rate hikes seem to have that sticky CPI and inflation holding on a lot longer. So, bit of a joke, but Jerome Powell had to throw some water on those flames of the possibility. Now, the initial reaction was a relief rally in U.S. equities from the pocket support that we outlined yesterday from 50.50 down to 50.30, and then it was a surge above that resistance 5100 to 5110, and the market even stretched just a little bit farther before falling back on the session, and many of you were able to capitalize on those levels in the S&P 500 and purchase some of those futures and sell them out higher. So congrats to you that followed that. Now, simultaneously, the market's attention shifted to a 2% surge in the Japanese yen, fueling speculation that the Bank of Japan might intervene in the country's historically weak currency. In light of this, we're directing our focus on cost-effective call spreads, as well as the mini and the micro futures contracts in the Japanese yen. If you haven't looked at that chart, definitely take a look at it here. If you look at the futures, it's going to look like a Nike swoosh starting to form. If you look at it in the opposite way, it'll look like the yen is going to finally strengthen against the dollar index, coming from 155 down to 152. So these strategies that I'm outlining here could be beneficial here for navigating fluctuations in the Japanese yen. Now, the yen is going to be important because if we start to see that yen start to rise, some of these inflation trades, because that's what people do, their yen is so weak, they need to buy any kind of asset that they can because it's appreciating in value. We may see an unwind on some of the U.S. equities, and also we may see some fluctuations here in the precious metals market. So it's going to be interesting here. Now, turning to the precious metals, we saw an initial reaction on the meeting, and it was slightly encouraging. We saw a move up to 23.39.5 in the gold market and 27.25 in the silver market yesterday. Now, on the surface, again, encouraging to see some green on the screen. However, those gains, they really didn't hold. I mean, the market seemed to realize that Powell's tone wasn't initially as dovish as it sounded. It was almost like telling somebody that, hey, the patient won't die, but we're going to end up in critical support, life support, whatever, for a little bit longer at the time. So market got that relief rally that death was not certain here and the Fed wasn't going to raise rates. So the headwind is that the Fed needs more confidence that inflation is under control in order to lower interest rates. Now, today on the docket, we're going to have data from jobless claims and durable goods. Not really anything that I think is going to move the market here too much or move the needle. And it's going to be the latest employment report tomorrow that could have some impact on these markets here. So all the levels that we've been outlining have really been holding quite well on the surface here because of the fact that we're running out of these market moving data points at the moment. So you're going to see where bottlenecks of volume tend to converge with some of the trading action. So on the S&P 500, the bears need a close below 5,100. That'll open up the floodgates, and I think that we could see a bigger washout on the surface. And then also, if you see 50.50 down to 51.10, that was yesterday's range on the S&P on the downside. If that can hold that pocket support, we could see a move back up to about 5,100. You need a close over 51.30 on the S&P in order to stretch up to about 52.11. So keep an eye on all those levels. You can ping pong back and forth on that. I'm seeing a lot of you guys trading those micro S&Ps. Great job there. So looking at the precious metals while you guys are all here. So the gold's key level here, 2,300. That's going to be the battleground for traders. So we saw the market come down to about 2304 on the overnight session. Now we're on change 2310. That 2300, again, I think we'll see some rejections if we try and go back below that. However, we really need a move over yesterday's high, which is like 2339.5. in order to reestablish a move up to 23.50 and then 23.65. The bulls want to see a close over 23.65 and the next session to open up stronger. If you get that, 2,400 all-time highs are back in play. The problem on the downside, you get a close over below 22.91. You could see that move to 22.73. That's where the bears gain control. Systems will flip. I track about 100 different trend following trading systems, and a lot of people follow these types of momentum plays, and it's like the tide has turned out. So trust me on this one here. We don't want to see a close below that level. Now, fortunately for the bulls, one, you have people that want a dollar cost average in gold. You do have central bank buying, and then you also have a number of key levels of support. You're going to have the 50, the 100, the 200-day moving average. These are all going to be places where people are going to go, hey, gold's testing the 50-day moving average. Let's buy it here. It's been in an uptrend. Gold testing a 100-day moving average. Let's buy it. It's been holding an uptrend. So, those are what's going on there. Silver market getting a little bit dicey. You guys don't want to hear that. You throw me under the bus for that. But the reality is that the gold-silver ratio, people discredit it and things like that because silver is an industrial metal. Gold's the precious metal out here. 87-1. So we don't want to really see that. We want to see like a break below 85, 83, 82, and then all of a sudden, bam, it's the short squeeze in the silver market, and it's party on, and we're all celebrating here, popping champagne. But 92-1 was that 2024 low high on the ratio, low on silver and correlation to gold, that we get down to there. I suggest that people really start coming in and looking at silver as a bit stretched against that gold market and looking for that snapback rally here. So put on that's where you want to leverage up your positions, in my opinion. So you got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss, may not be suitable to all investors. Good luck and good trading.